We're into the second half of our program, and now I'd like to hand over to Thibaut Grummet to introduce our second speaker, Michael Lawal. So over to you, T.
Hi, everyone. Lovely to see all your smiling faces today. So Michael, in 2019, founded Sendit.Money, a payment platform, but not any payment platform, one that tackles economic exclusion, allowing users to send money internationally. Their services are simple, secure, competitive, and dependable. Currently operating between England and Nigeria, their sights are set on many more very soon. To expand, Michael has raised funding, and he's here today to share some nuggets of wisdom with you all. So to the man rivaling PayPal, let's give him, Michael, a very warm welcome.
Thanks, Steve. It's great to be here. Yeah, that's rivaling PayPal. I found that very humbling. So thanks, Steve.
So, Michael, do you want to share with us your story?
Absolutely. It's a great pleasure to be here to be able to share story. I'm a strong believer that our life is all about stories, and knowing how we share those stories and connect with others through those stories it's what makes the magic happen. I faced the frustration myself starting out 14 years ago. My first company, I found myself working with the likes of World Banks and Rothschild Foundation in East and West Africa. And I used to always stand out in the room and have people, folks, experts from the Western world always kind of look down on us and like, what's this guy even talking about? They already have their preconceived notion of who we are. So I literally have to prove myself 10 times harder than the rest of the counterparts in the room. So now evolving over years and becoming an angel investor myself and developing a very good relationship connection within the industry, I came across one thing from my first company. Whether you're a Black founder or female entrepreneur, the key thing is we all need an infrastructure, an ecosystem that gives us an access with the people that sympathize with our stories and with the problem we're trying to solve. And I found that over and over in the VC world, because if I go to, in the VC realm we have today, we're not going to shy away from that biases. They even in London, we have what I call the golden triangle, which is the London, Oxford, Cambridge, which is where the 65% of entire funding, even in the UK, is kind of concentrated on. So if you don't know any old 67 white male man in Oxford or Cambridge, you can put in a word for you, you probably don't stand a chance. But that's a changing, because now we're moving from a place of unaware to a place of awareness, and thanks to a program like Fund and Focus. And I look forward to receiving your question, David, and breaking down views and challenging views. But also, before I close my mouth, is to say it all comes down to three things I've learned in my journey. It's about your story. People invest and buy your story. It's about how credible you are as a founder. If you do not thrive on your unfair advantage and make your unfair advantage come as credible enough that someone would think, oh my God, I'm going to be an idiot if I don't back this guy or this woman, then no one is going to bet on you, because you're the first person that's going to bet on yourself. And the last one, it's all about people. Over to you, David. I look forward to your questions.
Brilliant. Thank you so much for that, Michael. And I agree completely. At the end of the day, and this was an article I read some time ago, but it was saying, what are the main things that an investor looks at in a pitch deck? And the number one thing that they look at is the team, closely followed by the financials, and then the problem and the solution. And it always surprises me in decks when people put the team at the very back, because if you think about it in the context of a story, the team and the people are the story. And so when I'm constructing decks, I always start with sort of a kind of an elevator pitch, just this is what it is. And then here's the team, here's the problem, here's the solution. A bit more gumph. I put the financials at the back because I mean, they always know financials are at the back anyway, but I believe that the team is absolutely critical and needs to be at the front of the deck. The team is core to that. So if you could just share with us, Michael, then a little bit of what you've learned on your fundraising journey in terms of any challenges that you've faced and how you've overcome them.
I'm going to try and summarize that in about 5 minutes. There's a lot of challenges I've overcome. And I'm going to steal a lot of words from Holger, because she actually, I resonate with a lot of ideals and thoughts. It comes down, you've got to be persistent. It comes down to that, the persistency, how you wake up every day. Like I tell myself every morning, don't worry, no is part of the process. Actually, no is a good thing. It comes down to that mindset, because every day the VC model is designed to say no to virtually every pitch that comes to their table. Whether you're a Black founder or female entrepreneur, that doesn't really matter to them, but you really want to try and make sure you minimize the chances of them not saying no to you. And that comes down into how you present yourself. Because at the end of the day, the VC, I'm a numbers guy. I love data. So if VCs raise 10 million for fund, the VC to break even has to invest probably $100,000 check in 100 company, and 10% of those companies has to become a unicorn for VC to return the fund 3 to 4 times, and for them to break even and cover their management costs. So if you understand that mindset of how the VC work in the first place, not every product is meant for a VC. Not every product is meant for an angel. There's a lot of alternative funding out there. And what I've picked out along that journey is to first do my own homework. This product I'm building, what's this product for? This product I'm building, are there funds, investors out there who actually face these challenges or face this problem? Because if people face that similar problem, they can connect to you on an emotional level. And when people connect to you on an emotional level, they have tendency to be invested in you. And I've seen that in our journey. And another thing there is ability for you to present yourself credible. Because to the VC, yes, the market is great, amazing. The team can deliver because they're a very credible team. Then in the mindset of that VC comes down to one thing. Can they actually execute on the roadmap? Can they actually deliver what they're promising in this pitch there? And to you want to tell a story, to tell me the VC says, you don't need to teach me about this. I know this, I validate this problem, because no one wants to buy what no one is going to pay for. Because let's face it, most of entrepreneurs, especially minority entrepreneurs, and I have opportunity to speak and mentor a lot every day, we have what I would call a fantasy ideas in terms of wanting to solve a problem for our community. But we need to understand here that the VCs are there to make money. They're now new funds want to make good in the world, but also wants to make money. So is your idea, do you have the solution you bring into the market? Is there potential for 1 million users to actually download that app, to actually use that solution, to actually pay you for that solution? If the answer is yes, then you have something that is bankable by the VC. So understanding yourself, understanding the problem, and please validate. You've got to validate the problem. Don't just think in your mind is a viable product and then start talking to people about it. You've got to validate it. You've got to join ecosystem. We joined Founders Institute, for example. We're very fortunate to be part of our Labor Project program at Oxford University. And I think that's when things begin to change for us and Sendit.Money. And that still comes down to that credibility. What are those ecosystems out there that understands what you're solving, but people already trust these institutions or this ecosystem, and that becomes a springboard for you in your journey. And that's why people join the likes of Y Combinator or Tech Starters. There's no magic bullet these accelerators are adding to their journey. But what they have to their journey is that credibility to say, for this startup to get into Tech Starter or 500 startup, then I will be an idiot not to invest in this company. And it's that emotional alchemy, I call it, that goes on in that journey. And once you understand this as a founder in my own journey, I've literally understand what I call my own cheat book. And I literally, before I approach someone, I want to understand, does this person understand the problem? I don't want to go into pitch to an angel investor or VC and start teaching them about the problem. They're not going to invest in that. No one will invest in what they don't understand. Because while someone doesn't understand, and this happened, that's where a lot of Black founders and female entrepreneurs, we get no, because we're very passionate about our community. We've faced the problem, we're very frustrated, and we go to pitch to these VCs and angel investors. and we take that anger into that pitch. And people can feel that anger. I was in a pitch where then a black funder was pitching and he was saying, we were underfunded. No one listened to us. No one wants to hear that. Hang on a minute. What's the problem? What's the solution? How big is the market? Is this something that could potentially become a unicorn? Because everyone on that table who wants to invest in you, they want to do good in the world together, but they're looking for any more of 10x of their initial investment. So do you have that probability to give them the 10x of the initial investment? If the answer is yes, then there's a conversation. Then,
yep.
And that's what's worked for me, David. Is I didn't go into a meeting and begin to think from a place of negativity, thinking, oh, the stock is against me. Oh, they're going to say no. No, because once you see the bigger picture, it's about you building your own little tribe. Every VC I've had conversation with end up becoming friends. Every angel investor I've pitched to end up becoming friends. I don't pitch to any investor to get money. I pitch to them to develop a connection. And that connection is what opens doors as you further along in your journey.
Yeah, that's brilliant. So that was, I'm glad we're recording this, because there were some incredible nuggets of gold in there. I'm just going to pick up on three things that you said, Michael. You talked about being selective who you're pitching to, and I'll raise the three things and I'll come on to it. So you being selective of who you're pitching to, understanding what is it that drives the VCs and the fact that they need those unicorns. And the third one that I really loved was what you were saying about don't carry that anger into the pitch, because all it's going to do is create an environment of anger, and when you want to build an environment of relationships. So coming back first to the pitch one. So what I typically do when I'm working with clients is I'll draw up a long list of 200 or 300 investors. And then we'll sit down and systematically go through their websites and go through their LinkedIn profiles and go through all of their information. As Olga said before, it's hard work, it's time-consuming work, but it's really, really important, because at the end of the day, what you want to do is go out to, in my view, a short list of not more than 50, where you've already zeroed in and said, you know, they might say they want this or they want that or they want the other, but you can zero in and make sure that what your pitch is offering fits with what they're looking at investing in. And you need to think about this in the context of venture capitalists generally are investing other people's money. So they themselves have gone out and raised money from wealthy individuals, from pension funds, from university endowment funds, from insurance companies, from investment banks. And they've taken in that money, saying to those funders, who are often referred to as LPs or limited partners, we are going to invest this in companies that fit these criteria. And so it's really important for you to realize that if you're a biotech business, don't bother applying to a venture capital firm that only invests in fintech, because you're not going to get anywhere, because they don't invest in biotech. They only invest in fintech. So take the time. It's legwork up front, but it's worth taking the time, because if you're focused, you'll get a much better reaction. The alternative is, you know, if I throw enough mud at the wall, some of it's going to stick. Which is true. But as I was saying when we were talking with Olga, the investor community is fairly small, and they know each other. And if they're out having a drink and a chat saying, oh, I got this pitch from so-and-so, it was completely irrelevant, and the person there was, oh, I got that too, and what was it's like you get a bad reputation in the marketplace. So take your time and find the right people to pitch to. I've forgotten what the second was. The third was the second was not carrying your anger. And that's so true. When you are pitching, you need to be in the zone. You need to be in the zone of, I'm confident, I understand my business, I understand my numbers, I know what it's like, and this is me presenting for all I'm worth to to convince you to get us to the next stage of whatever the presentation is. So if you go in there with a mindset that's filled with anger or anxiety or anything like that, you're going to be in a difficult situation. And bear in mind, these investors get pitched to all day long. They can very quickly read signs of people like being in not good places. So really, you want to focus on making sure your head is in a good place, making sure you're feeling confident, making sure that you know your stuff, and go forward from there. And then the third one, now I have lost it, was pitching.
That's correct. So the third one there is you going in there and presenting yourself to be credible.
Yes.
You don't want to go there and just start doing blah, blah, blah.
Exactly.
You really want to go there, showing to them you know your stuff, and they will be an idiot not to actually invest in you.
Yeah, absolutely. Absolutely. Fantastic. Wonderful. Thank you. I'd like to open it up to the audience. Is there anyone who has any questions that they'd like to raise with Michael and his story? I can ask him a few other things, but I'd love to open it up. Pooja, do you have any questions? No? Okay, Ruth?
I had the pleasure of having a chat with him in the breakout room, so I'm good.
Ah, okay. Excellent.
Yeah, David, I'd like to just pick up on Michael's point about VCs. I think it's very important founders understand the basis of how VCs make their investments. And I think what Michael was saying, if they've got $100 million fund, they've got to return 4x to their LPs. And to do that, they've got to have exits of at least 4 billion at 10% to return that fund to them. So that means that they're always looking for the big bet, a big market, a big exit. So a lot of founders get confused. They think that there may be an opportunity for a small project to get taken seriously by the founder. And there's nothing wrong with the project. It's just that it's not scalable, or it won't reach the exit levels that VCs are interested in. So if they get rejected, it's not because the idea or the concept is wrong. It's just that it won't meet the milestones that the VCs look for in their exit plans. So I think it's important that founders understand the basis of how VCs make their investments, the way they evaluate investments before they make them.
Yeah, excellent. Thank you very much for that, Farouk. Ruth, did you have a question you wanted to ask?
I just wanted to pick up on, I don't know, the only thought that comes to me is people buy from people. And I'd love Michael to expand on that in his area of business. What does that mean to you? People buy from people.
I have a theory that the next business that will do well, it's not going to be business that have the best CTO or tech. Now is an era of tech-enabled solutions. But we're going into an era where it's all about the community. Community-based solutions are those big companies that are going to make big bets as we go in. And we start seeing the early stage of the validation of that theory from the likes of Clubhouse, from the likes of Hopin in the UK, a platform that just brings people together to have conversation and create that sense of community. And to me, it's about understanding the power of that connection, of bringing what I'm calling the blockchain space network effect, is the ability for you to create that a kind of a close network effect where I'm speaking to all of you today. This is my first time meeting you, and I want to speak to as much as you after this conversation, because that's where the real magic happens. It is the people. It is the power of that, understanding that network effect concept, that for every VC you pitch to, don't go pitch to them because you want money. Actually, those who go to pitch for money never gets money. Go to pitch to that VC and ask them about their interest, ask them about their failures, ask them about, be human with them, ask them about their vulnerability, ask them about, try and pop their ego a little bit, because they makes the VC world a little bit too sexy, egocentric, and I'm just there to scare the shit out of the entrepreneurs. Go there as an entrepreneur and just pop those egos and just say, out of every fund you've invested, I was in a VC meeting one day, and I said, I've seen from companies you've invested in, there are a couple of them that I can see are not doing well. What is the lesson you've learned from there? investing forward to founders like myself that come into you? And the guy was like, oh, no one ever asked me that. And that whole conversation led to where he went for his last holiday and what is his favorite meal and how he's been to Kenya. And we talk about Africa. And it's totally left from being there to talk about invest in me to be, I'm a human, you're a human. I just want to get to know you as a human. And magic happened from there, because this individual making an introduction that ended up giving us a £50,000 from an angel investor. So, and I've seen that. And that's what I mean by understanding the power and the magic of bringing people together in your journey is very key as a minority entrepreneur, as a female entrepreneur, because once you go to people and be too formal with them, which I love the word professionals, which I don't live by, and you can see from the way I'm talking, is people want to be people and they want to be treated the same. And the moment you can connect to people on a personal level, I have a word, people will forget everything you do for them, but one thing they won't forget is how you make them feel.
Yep.
Thank you.
Thank you, Rose.
Great answer.
Brilliant.
Thank you.
Yes. That was Maya Angelou who said that first.
That's correct, David.
Wonderful author. Great. Okay, we've got one more question that I've just come through on the chat. So the core team and the founding team are undeniably very important. What's your advice on presenting this in a pitch deck? Is it better to have lots of detail or less detail?
That's a very tricky question, but I'll try to do justice to that. From my experience, I'm a very simple person and I live by that mantra. Nothing is complicated. The VC life itself is complicated enough. So don't give them a deck that will make their life more complicated. Keep it simple. VC will want to do a basic due diligence, and basic due diligence for VC now, this is a LinkedIn profile. So if you do your deck and pull your team forward, I have one single paragraph about why the VC believe, because don't forget it, when you send them your deck is just a representation of who you are. Your deck is presenting to them what the opportunities are. But in the minds of a VC, the question is, how are they going to deliver? Can they actually deliver what they promised in this deck? And your team is super powerful in how you present that. So one single paragraph of what they've done in their past, what their achievements are, and what it brings to their team. And then you really want to have that team slightly very coherent. Like in Sendit.Money, the way we tell our story is Michael understands the problem. I understand the market. My co-founder, Julie, she's a female founder. She's worked with startups, 40 Series A startup here in London. She's an operational guru. And then we have Bowen, who is a UI UX designer, who has been the one designing this deck. And we have our CTO, who has had 18 years of experience building. So with that synergy, don't go to them, and you need to let them know you have the unfair advantage. And you want that to come across when you're presenting your decks. Your team is very powerful. Until you get a Series A, I will strongly advise, try to make your team come as credible as important, because any serious investor investing from pre-seed to Series A is taking a bet on the team. Forget about them asking you about tractions, about this. A serious VC or investor knows that. Now, until you get a Series A product market fit and achieve that viral coefficient, you're just trying to figure things out. And they know that, but they won't tell you that. But what they're betting on is, can I work with this person? Is this person credible enough? Do they have deeper understanding of that market? And that's why if you're raising seed rounds or pre-seed round, your team is your asset and you want to do justice to them. But please don't give the whole CV background. Just give one single paragraph and a link to their LinkedIn page. If a VC wants to know more, they will find out about them.
Yeah, that's very true. And in a project I'm working on right now for a client, increasingly the VC firms are having type form or Google form thingies where there's a preset bunch of things that you have to submit as well as uploading your pitch deck. And in the vast majority of them, they're now saying, give me the LinkedIn profile of all the founders. Because that's one of the first places they're going to go and have a look. Who are these people? What is their LinkedIn saying? And therefore, that means for you as a founder, is really important to make sure that what you're positioning on your LinkedIn profile reflects what you want investors to see and understand. So if you've got experience working in a big corporate for a number of years and you understand how things operate at scale, make sure that that's reflected in your profile. You know, if you're on your third startup and you've learned all of these things, make sure you set out what are the key things you've learned on this journey that you've been down. You know, if you've got a particular background or a qualification, make sure that it's reflected in your LinkedIn profile, and not just down at the bottom, but in that section up at the top where you've got free form text to talk about yourself, because there's no question now that LinkedIn is where people go to find out about other professional people. So if nothing else, do spend a bit of time investing in building up and developing your own profile on LinkedIn, and, you know, start getting a bit more active, and because these guys will go in and they'll not just look at your profile, but they'll go in and they'll say, okay, what has this person been posting about? What opinions do they have? What are they investigating? And the further you get down the process into due diligence and things, the more depth they're going to go into, and they're going to, you know, they'll have teams of researchers in their companies. It might not be the main VC, but they are going to drill in and really understand who you are and what you are. And your social media platforms and profiles are really important in that respect. So yeah, definitely support that one. Any other last comments from anyone or questions from anyone in the audience? No. Okay.
While we're waiting for David, I'm sorry to interrupt you. I just want to highlight this because I know that it's been recorded and we never know where this will end as well. And then there will be VCs who probably will watch this. I know they won't come on the call. It's just to put this out there for them as well. People have got opportunity to have friends with VCs, with power funds. And I can say this with authority, and I'm just using this avenue as well. Stop getting scared of a market you don't understand, and stop making founders a scapegoat of your own, what I would call your own inferiority as well. A VC will say a market is high risk because it doesn't understand that market. Work with founders who are catalysts of their own market. If there's a founder from Bangladesh, years ago, people were saying Bangladesh is a non-market. It's the VCs in Singapore understand that market. Now Bangladesh is actually blowing up in terms of payment space. Now, a lot of VCs 10 years ago were saying Africa is a high risk market. Now, while the whole startup world was struggling, in the EU, we start seeing unicorns popping up everywhere in South Africa, in Kenya, in Nigeria. So VCs, they probably will be watching this. To me, if VCs are betting on innovators, they have to be innovative themselves. And one character of being an innovator is taking risk and going to a frontier market where no one is there, because we need more solutions in times of making the world the best. I look at Europe and I look at the law of innovations that these drop millions and hundreds of millions of dollars for, and ask myself, how many of these innovations actually changes life, actually affects life? The emerging market is where the problems are, and problems only happen where innovations go. And this is just, I know American investors taking a lot of bets on emerging market, but UK investors are extremely conservative. And this is just me challenging them. They're watching this by any chance to say, get out there and use money as a service, use money as a force for good, invest in female entrepreneurs, invest in Black founders who are a catalyst for their own ecosystem. And in that way, we can create a more fairer society and fairer funding for everyone.
Absolutely brilliant. Thank you very much for that, Michael. And that's a wonderful segue into one of the things that we do at Funding Focus is for everyone who attends our events, we make a contribution through B1G1 to charitable causes. And our charity that we're supporting for everyone who's attending today is based around Youth Day in South Africa. So Youth Day came about from riots in Soweto in the mid-1970s when the Black children were not getting the same quality of education. And it's become a big movement. And in fact, today's a public holiday in South Africa. And so we are making contributions for everyone who's been here today to provide education and skill training to disadvantaged youth in South Africa. So thank you very much for participating today. And this is something that we're very committed to as a company. We make contributions every time people attend our events. We have also committed as a company to donate 5% of our gross revenues through B1G1 to charitable causes that are supporting UN Global Goals 4 and 5, which are quality education and gender equality. And so through the activities of previous events that we've run, we've provided entrepreneurial skills training to female entrepreneurs in Zimbabwe. We've provided basic skills training for young women in the Philippines who have come from disadvantaged families where they're not getting an equal access to education, for them to go and learn vocational skills. And now we're providing education and skills training to youth in South Africa. So we're building that up into a core part of who and what we are as an organization. With that in mind, I'd love to add by letting you know that we have now submitted our application for Funding Focus, the company, to be registered as a B Corp. And so in case you've not heard of the B Corp, it's all based around the concept of people, planets, and profit. So we've just completed the initial registration process on that. It takes a few months for them to go through and certify us. And then for probably our first year of full trading, will be what's called a B Corp pending, with a view to be getting a full B Corp status by the end of our first full year of trade. So I'd like to just close out by giving you an update, and I touched on this briefly at our last session. We're a smaller group today, so I'll probably do it a little more informally, but we started out 18 months ago. So our first event was in November of 2019 at the London Stock Exchange. We've then ran our second annual event on the anniversary date in November of 2020, where we've tapped in initially to a global audience. We've now run 2 events this year, and we've got another one running this afternoon. But I'm really excited because we've just done this off the back of our own social media, and we haven't really poured any significant resource into this. But we have now tapped into a global audience, and we have over 750 contacts in 27 countries on 6 continents. So I'm delighted that we have people from Australia today, because our previous events, as I said at the beginning, were held when it was in the middle of the night in Australia, so it wasn't really possible. But we've now had people from Australia. So literally the only continent we haven't had anyone attend one of our events from yet is Antarctica. So we'll be working on that one next, but I don't think there are too many entrepreneurs there. Lots of penguins, but so yeah. So what we're doing in addition to these events, and our plan is to continue running these events and scaling them up to get a wider audience. Running these events 4 times a year. One in Q1 in March, the next now in Q2 in June. The third one will be on the 15th of September. And then our annual conference, which will be the longer 4-hour event, will be held again in November. So that's part of the whole raising awareness aspect of our mission at Funding Focus. The other part of our mission is to provide education. And we've launched our first education program, which we completed 2 weeks ago. So we had that pilot group of people coming through a program that we call Funding Focus Explore. It's a 6-week online program delivered live, 2 hours a week over 6 weeks, which is just a sort of an introduction to fundraising. So many people have come to me and said, I don't really understand what it's all about. I don't know who all these players are. I don't know how to prepare. You know, I'm interested in an accelerator, but I'm a little bit, nervous about it. And so we've deliberately designed this as an entry-level introductory program for founders to come to and participate in. If anyone is interested in learning more, just pop yes into the chat, and we'll come back to you and have a separate conversation. I don't like to do selling on these things. I hate all those webinars where you get the hard sale at the end. I do not like that. But if you're interested in learning more about that, please just pop a yes into the chat and we'll be in touch. The other elements in our program that we're still developing, The second program that we're doing is going to be called Funding Focus Exchange. It's a much more in-depth kind of, we do it with you to help take you through the whole process to the point where you're actually ready to pitch. And it will include pitching to some live investors in a safe and secure environment, so you can go through that whole process. And then beyond that, we're looking to launch that program in the autumn. Beyond that, in 2022, we're looking at launching 2 more services. One is going to be called Funding Focus Exclusive, which is all based around one-to-one coaching for you as the entrepreneur. And the final one is Funding Focus Expand, which is based on everything that was in my first book, Add Then Multiply, which I've got here. And you can see on my LinkedIn profile, which is more for more established businesses who are looking to grow and scale using the FACE methodology that I've described in that book, which is fund, acquire, consolidate, and exit. So it's kind of taking my core stuff, but putting that at the back end of the program for the established businesses, because I think based on everything that I've read and the research that I've done, there is still huge demand in the marketplace for people to go through these processes and get access and understand and learn how to seek out and secure investment for their businesses. So that's what we're doing at Funding Focus. We're working on big plans to grow the company next year and over the coming years. And you know, as I said, we've tapped in with very little direct activity and marketing. We've tapped into over 750 people in 27 countries on 6 continents. So there's definitely a market out there. We've now, as I mentioned at the beginning, we've recruited 2 people who've been on here today, Drew and Jacob, who are coming in to help us with our whole marketing and branding and image and all of that. And we're looking at doing more to scale the company. So thank you very much for your support. Thank you for being here. Thank you in particular, Pooja, for being our first person from Australia to come to one of our events. And it's great to see you. Did my book arrive, by the way? It did. Excellent. Fantastic. Wonderful. Okay. Well, look, folks, that's the end of the session now. I'm happy to stick around if anybody has any less formal questions that they want to address. But if not, we have reached the end of our session. Thank you very much for your attendance. And I hope to see you on the 15th of September at our next event.
Bye, everyone. Nice to meet you all.